Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Thursday, June 16th, 6:34 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Okay, we've had a lot of overnight drama. We are down roughly 2.5% on futures across the board. Swiss National Bank did a preemptive strike and raised interest rates last night 50 basis points. The Bank of England is meeting this morning, probably going to raise rates. And the Bank of Japan is going to meet tonight, and there's the potential for them to do the same thing. So what you're seeing is interest rates are going up around the world. Global liquidity is shrinking, and that's going to put pressure on equities. So let's get into the charts. I sent out a pre-market note. I will briefly go over that when we get to the charts. So if you are not a member of the group, maybe that's an incentive to join up. If you go in the show notes, you'll find a link to the blog site where you can drop in your email address, and then you'll get all my content morning, noon, or night right to your email box. That might be a good thing to do. It'd be great to have you along for the ride. Want to go over some stuff we rarely go over, but I think it's going to be really, really important in the days and weeks ahead that we hit this. And what you're looking at here is a 40-year chart of the dollar yen, and you can see where we're at. I've got a massive inverse head and shoulders here, and this is drawn years ago, but it's just now starting to play out in the sense that we've seen a dramatic move in the yen. And remember, when the dollar yen goes higher, that means the yen is going lower, basically debasing their currency. And if you've been reading along in macro, Japan has yield control in place where the Central Bank of Japan is buying all the government bonds at 25 basis points. And as global yields have risen around the world, and they're buying, basically unlimited bonds at 25 basis points, that's being reflected in a falling currency, which means this chart is rising. And you can see the various levels back in time where the yen has been. I've got this Gartman line up here at 260. He was just at one point when he was out there in the media, you can see back in the early 80s, it was all the way up at 260. Now, what's going to happen is at some point, and it may be tonight, it's going to become a political problem where, the Japanese people are watching their buying power disappear. And don't forget, they are a huge importer of everything, especially energy. So as this thing falls, their cost of imports is dramatically rising. Why do we care? Well, tonight, what the Bank of Japan may do is say, okay, well, we give up. We're going to set our threshold at 50 basis points or possibly even 75 basis points. And then what you'd see is probably a spike in yields over here. Why? Well, Japan is one of the biggest buyers of U.S. treasuries, and the flows out of Japan have a huge impact on our bond market. So if you see their yield control kick up to 50 basis points or 75 basis points, that means there would be less incremental buyers for U.S. treasuries, which means the rate would likely go up, which means something like TLT would go down. And we've already seen it this morning in the pre-market. There was not a big reaction in TLT yesterday on the FOMC announcement, but today, at least if my pre-market read is right, we're down at the lows again. So if you're not in TLT, it might be a good idea just to put a marker out there on the downside. I wouldn't, go into gonzo mode shorting TLT like mad, but I don't think it would be a bad idea to have a little marker out there in case the bottom falls out, to simply have it out there, to be in a position where if something dramatic does happen overnight or in the weeks ahead, you'll have something out there. And I think, this 110, below that, you've got some support at 105. And remember, just the other day, we had a huge buyer out in August of the 107, 102 put spread. He bought that 24,000 times. So that may be a trade you want to do, or do something like an August 105, straight up, a little bit out of the money. And then if there's some kind of big collapse, then you'd be in a position to not only be on the right side of the trade, but if something dramatic really does happen, that your gains wouldn't be capped. So for instance, if it went down to 100 or something, you would capture all those gains rather than having a spread where your gains would be capped. Bitcoin is down. We're watching this 19,000 area as support. Really, again, just to reiterate, for the bulls to get something going, they've got to get over 24,000. That to me seems unlikely. You may get a kickback rally up to that level and then roll over. But with global liquidity shrinking and a lot of these hedge funds that are heavy into crypto being severely pressured, you may get, some blow-ups along the way where they'll be forced to sell whatever coins that they have remaining to get out, and that would force some downward pressure. Revisiting our put-to-call ratio here, you can see that yesterday on the Fed announcement, there was some call buying. What we're going to watch in the days ahead is if equities truly fall apart, look for some type of capitulation, panic put buying that may mark a short-term bottom. You can see that in this little cluster, we had a low, and back in time where we got big capitulation put buying, those are often good times to begin looking for a reversal. We did have a sizable bounce in our oscillators. We were down at minus 77. We got a bounce into 44. Now, obviously, today if these pre-market levels hold or even go down further, this will of course drop again, and then we're going to be down in oversold territory. Same thing on the NASDAQ oscillator. We bounced up to 13, and so now we got to be watching 60 on the downside today. If you've got your pencil handy, I want to give you yesterday's lows, if you don't have those already, as a simple yet effective pivot point that you can use today in your trading. So let's go through it. On the futures, ES, the low was 37.08. On NQ, the low was 11.236. And on RTY small caps, the low was 16.90. Now, if we go over to the indexes, on SPY, the low was 370.76. On QQQ, the low was 273.34. And on IWM, the low was 169.28. Have those levels handy, and we'll get into the charts and talk about how you may want to use those levels today. So yesterday, we came off the low, we took a peek into the gap, and then fell back below the gap into the close. So now we're back near the lows, near this 375 level, even a little bit below. Remember that now today, we're going to, let's just say the pre-market, wherever the pre-market ends up, when we open, you'll have a big gap above. So then what you can do is use our gap strategy that we use every day. Mark where that gap begins and ends, and then in conjunction with yesterday's low, you can look for an objective long. If we open below yesterday's low and then recapture it, that would be an objective long, and then you would be in the gap, and look for a gap fill if there is a rally, because you know how the market operates. Maybe they open it low, then recapture, come up and fill the gap, get that check mark, and then roll over. And one thing I want to point out is we've got a trend line on the 60-minute chart here in red, that what could happen is, we go down and back test this trend line and then reverse. I'm not saying that's likely, or it's just a scenario, but if you were to drop below this trend line this morning, down into the, wherever, down below this low, you're going to be below that trend line anyways. So that can also be a reference point on your charts. Moving on to the Qs, you can see here yesterday, for all intents and purposes, we filled this first gap, and then when that happened late in the day, say the last, I don't know what it was, the last half hour, they faded that and brought it back down. So from a technical standpoint, the filling of this gap has been completed, and now we're back at the lows, even below the lows of yesterday. So Here again, we've got a downtrend line that you can use for reference. I've got it here on the 60-minute chart. I think pre-market, we're right down at this level. And again, remember that we're going to have that big opening gap to use in your trading this morning. And I got to say, I had set up all these pivot points and resistance levels last night after the close. And of course now, not that they're invalidated, but you understand that, 280, 250 is not the main pivot for this morning. The main pivot is going to be yesterday's low, right? So just keep that in mind, that I didn't go through pre-market and try to change every pivot on here. So understand that the main pivot on the indexes is yesterday's low, and that'll hold true for whatever you're trading, whether it be, Amazon or Nvidia or whatever it is. You can judge all of your trading off of yesterday's low. So moving on to IWM, we've got a different situation here in that we don't have a trend line coming down. We had a double bottom, and we've got this gap below. So I think those are going to be your key levels this morning, and you don't really have to worry about, you've got a trend line coming down where it could undercut and reverse. And if we go to the chart, you can see that we did not make the first gap. We reached up to it or near it, but then it reversed. So in the IWM scenario, this gap was never even entered before it reversed. So this morning we'll have a big gap down with a gap above, and you can use yesterday's low as a pivot. When we move on to Meta, here again, reached up to the gap and was rejected there. And we've got a low here at basically 160. I think it's 162 and change. If you break that, then you can look to the downside, down into the high 150s, where this trend line comes in. Might find some support there. And if you didn't want to try to finesse that, try to, pick a bottom, this prior low is again going to be a really nice pivot for you on a recapture into the opening gap from this morning. So keep that in mind. Apple did fill its gap and then faded. Yesterday we had lows, or the prior lows were 131.32. I had the Fibonacci's all laid out on this one, and you can see it there. 131.32 will be your prior low, and with a little downtrend line coming in just below that with daily support at 125. Tesla really had the best day yesterday, in my estimation, of the FATMAAN names. Started out the day really well and just kept on going. Got all the way through its gap up to 700, basically closing on the highs. I have not looked at where it is going to open this morning, but use your technical analysis principles that, if it opens down and begins falling, losing key levels from above is bearish. I think a good level here, just kind of eyeballing it. You got this spike down on the Fed announcement bar, right down into this 672 area. I would just call it 670. And then you've got a high volume over price bar here at 665. That was an area of resistance. You can see a lot of traffic right here where it acted as support, and here where it acted as resistance. And unlike some of the other charts we just looked at, we have a rising trend line. And I think a real important line is going to be 645 on the downside, where this support was. If that breaks, then that opens up 620 on the downside. Microsoft as well filled its upper gap. We've got a little gap below that's, a sliver. I think it's like $1. Not much of a gap, but it is there. I think anything below 245 will open up 242, and then again you've got these. You got the prior lows at 242, and then you've got the trend line here that comes in about 240, and then I've got daily support at 235. Amazon reached up. You could call that a gap fill. You've got some support at 104.50, and then you've got support down around 103, 102. You can see this little low, and you can see this downtrend line, and I've got daily support down at 96 if this whole thing falls apart. Google had a nice gap fill, but then they faded it. So your first support will be the bottom of the gap at 21.76, and then you've got the top of this gap from yesterday as support at 21.53. The bottom of the gap is 21.34. And like Tesla, you've got a rising trend line there. And then your fail-safe line is the prior lows at 21.20. You lose 21.20. Your downside targets are 20.60 and 20.40. That would be a pretty good risk reward there with $40 to $50 of downside if the whole thing falls apart and we come back to these prior lows. Netflix filled its gap, came back down. I think your first support is 177.50, and then you've got kind of another layer here at 171, and then you've got a double bottom low at 163. 164, right in that area. You can see it here. Prior low, double bottom. If we were to lose that level, then of course it goes way down. Semis got halfway into the gap. We'll probably open down in this 212 area. I think I marked on my chart 210 being the lows. if we break 210, I have a support level at 206, and then after that, quite a bit of downside in semis potentially if these lows were to break. Just a couple things on ARK. Little look into the gap, and then they faded it. We've got prior lows down here at 15 and this downtrend line. I would just say 1475. I mean, if this thing opens really low, I would use 1475 as a go or no-go level. And then if it recaptured like 1520, that would be an objective long if there's some kind of a rally today. ARKK filled its gap. So now your first support is the bottom of the gap, 3850. There's a little gap in here that I haven't marked, but you can see that there's a line of support at 3650 with a spike low down to 3550-ish. So those are some levels on ARKK to use as your reference points on those charts. And I did say this morning, let's say you bought some calls yesterday after the FOMC or prior to the FOMC, expecting a rally that you got, and you held those overnight. Of course, those are going to be deeply underwater. I bought a few. I think I got an Apple. I got some Amazon, and I got a couple on the indexes. I think I was long SPY and IWM. Of course, those are going to open at almost zero this morning. So what I would recommend on those is don't sell them for 5 cents or whatever pennies they might be worth. You make your own decision. But in those scenarios, we still got a big OPEX tomorrow, and don't discount the possibility, at least, of them making a furious rally to fill that opening gap this morning. And then if they fill that gap, that would be your chance to recover a lot of those losses. And I mean, you just feel horrible, selling something for 15 cents, and then they put in a rally either today or tomorrow into OPEX, where you say, oh man, I could have, why did I sell those so cheap? And then there's a rally. Because really at this point, the difference between selling something for a quarter and zero is not very dramatic. So holding out for the possibility of a stick save on a gap fill, at least in my estimation, is worth it. But where you can recover is, how you trade today. Don't think about, why did I hold those calls from yesterday? Use the reference lows and the gap this morning to your advantage. And if you get short and you see the thing falling apart, have your objective stop, if they reverse it, or trail your stops down where you can capture, some of that downside. And if you get stopped out, you get stopped out. But at least you would be on the right side of the trade today, even though in hindsight, anything that you held overnight would be obviously on the wrong side of what happened. So I think going back to the tenets that we laid out quite a long time ago and reviewed just the other day, the scenario of tightening global liquidity, whether that be QT, whether that be global central banks around the world jacking interest rates. Global liquidity is coming out of the system. That's a real tough environment for risk assets, equities, Bitcoin, that kind of thing. And so we may be in for a lot of further downside, and then that's our opportunity. So keep a very open mind for these bear market rallies, like today, racing up to fill that gap. I would be ready for that, but open to more downside today. And then going into tomorrow, remember we've got that, the Japanese bank that we discussed, and we're going to have some information out of the Bank of England today that may affect the intraday trading. So buckle up for a lot of volatility in the days and weeks ahead, and we'll do our best to manage it and stay on the right side of the trade. And remember, because things go down a lot faster than they go up, you don't have to go out there with giant position sizes. When volatility increases, you can drop your position size and make just as much money as you would, on a larger position size in a bull market where it kind of just grinds higher and grinds higher and grinds higher. So, and what that'll do is keep you in the trade longer, because your P&L won't be jacking around as violently as it would, with a full position in a bull market. So anyways, I hope those tips help. Like I said, if you're new to the channel, thank you so much. If you appreciate it, technical analysis and getting objective levels to trade each and every day, please hit the subscribe button, the alarm bell, as referenced earlier. Jump over in the show notes, add your name to our list, find the link, drop in your email address. You'll get all my commentary morning, noon, or night. And then what I'm going to do is I have a big list of setups that I'm going to be passing along in the next few days, and certainly over the weekend. So you'll have a lot of potential possibilities that you can alarm. And if this whole thing falls apart, you will, if you set your alarms, you'll have lots of choices of good setups. And I'll make mention of it again, regardless of what you're trading. A good reference target, no matter what it is the pre-COVID highs. Some charts are relatively far away from that, with a lot of downside yet to go. Things like ARK are already there. That doesn't mean they can't go lower, but the pre-COVID highs on the vast majority of charts would be a good downside reference and target if we do in fact break significantly lower. So keep that in mind, mark that on your charts, and we'll see what happens. Let's leave it there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.